Hello students, welcome to today's session on the topic which I'm going to cover, that is the uh, part of accounting, and the topic name would be accounting concept and conversation, right? It is a theory based of accounting and very crucial to understand the concept and convention of the accounting. Okay, so let me quickly share my screen. This is related to the introduction of accounting concept and conventions. Post that, I'll cover key accounting concepts, how it is important, and the last one would be important accounting conventions. Okay, so to begin with, accounting introduction of accounting concept and conventions. Accounting concepts, that is nothing but the fundamental assumptions, okay, and principles forming the basis of recording and preparing financial statements. So accounting concept, as it is clearly mentioned here, the fundamental assumptions, that means based upon the assumptions and some sort of principles. On the basis of that, the recording and preparation of the financial statements happening. Okay, talking about the accounting conventions. So accounting conventions, it is widely accepted practice, right? Because we have different accounting standards, right? So based upon that, the widely accepted practices or customs used to handle unclear or complicated business transactions, right? So in any situation, when we are not able to understand in which segment this particular transaction going to be posted, right? So here is convention is very much required to understand. So based upon the previous practices, if some other group, some other, similar kind of transactions happened on this regards, so that we can group in that segment. So this is nothing but the accepted practices and customs used to handle unclear or complicated business transactions. If we are talking about importance is concerned, so it provides consistency, right? So consistency, it is nothing but the going concern wise, right? So one of the principle of the accounting that will cover. So consistency, then clarity of the transactions, clarity of the ledger, clarity of the finance accounts, and clarity of the interpretation, right? If you are talking about fund flow statement, cash flow statement, okay, and the reliability in financial reporting, that is most important, right? We have covered in the previous one, right? So the reliability is nothing but how compliant it is with the the fundamentals, right? So reliability is very much important for the financial reporting, and it is totally based upon the accounting, right? So if the accounting is not correct, definitely the financial reporting will go on toss. Okay, so the main concept is business entity concept, right? So business entity concept is nothing but it is derived or designed in such a way to understand business and the personal, it is two different segment, right? That known or that comes under business entity. Okay. The second one is money measurement. So the main concept of the money measurement. So as per the American accounting standards, money measurement, it is nothing but all sort of transactions that should be measured in money format, right? If anything which is can't be measured in money, that cannot be recorded or that cannot be part of the accounting, right? So love and affection, we cannot count or maybe evaluate in money measurement, so that will not come under this. Next one is going concern. Going concern is nothing but the based upon the consistency, and business is for the long term, right? There should not be any deadline, correct? Because it's not a project. So going concern is nothing but for the specific group or for business, it is ongoing process. So we are doing the accounting in such a way, it is ongoing basis. The last but not least, that is the dual concept, dual aspect. So for each and every business transactions, there must be two impact, debit side and credit side. So if you are talking about this dual concept is concerned, right, it is always keep in mind, right? The impact should be on two account or two side or two legs, okay, of the transactions. So business entity concept, it is nothing but the business and owner are separate, as I mentioned earlier, personal and business transactions, because we cannot mix these two in one accounting, right? Money measurement is only transactions measurable in monetary terms are recorded. Money measurement concept. Going concern concept, it is assumed business will continue indefinitely. There should not be any deadline. Like projects, we have some sort of deadlines, right? But for business, we don't have any deadline, and it is having a concept going concern. Dual aspect concept, every transaction also have two effects, that is debit and credit. Okay, now moving to the next one, okay, that is important accounting conventions. So accounting convention, this is nothing but based upon the previous or accepted principles wise, right? So the consistency is one of the piece, that means use the same accounting methods year after year for comparability. Here let me clear you, consistency, it could be related to the grouping of transactions. Consistency, it could be related to the format of the ledger. Consistency, it could be related to the financial year as well, right? See, suppose one of the company in the US, they are following a financial year like, starting from Jan till December. Here in India, if you are talking about the financial year starts from 1st of April. So if one of the business started financial year starting from 1st of April this year, that cannot, gonna change, or that will not, kind of accepted principle or conventions. Next year they can change it from Jan. No, right? So if they are changing it, there should be a proper format, or they have to continue on ongoing basis with the same pattern, same format, same financial year, right? So that comes under consistency. Use the same accounting methods, format, okay, year on year basis. Next one is materiality. Materiality is only significant information is disclosed in the financial statements, right? What is the relationship between one partner and another partner? Who is the working partner? That is not required at all, correct? So the materiality, it is nothing but which can be measured only with the part of the financial statements or final accounts. So only the significant information which is relevant to the stakeholders that can be disclosed, or it will be disclosed in the financial statements. Now another one is conservatism. Conservatism, it is also known as prudence. Okay, so recognize expense and losses immediately, right? But profit only when realized. This is somehow I would say the contradictory one, right? But this is the conservatism, right? The concept is known as conservatism concept. That means all the recognized expenses and losses, whether it is really incurred or not, but if it is realized, if it is recognized, definitely it should be recorded immediately. But for profit and loss, we cannot book in advance, right? If it is not realized, it cannot be recorded in the books of accounts. So here the conservatism works like, if it is not realized, profit will not mark it, it will not recorded in the books of account. But for expenses, suppose rent, right? Rent is nothing but the expense, correct? So if it is due in the month of September, however it is not paid, but still it will be recorded in the books of account, correct? So that known as conservatism concept. That means if it is recognized, expenses and losses immediately recorded in the books of account. However, profit only when it is realized. If it is not realized, book profit cannot be disclosed, or it should not be a part of financial statement. Last but not least, this is the full disclosure. That means there should not be hidden, or there should not be anything which is not recorded or not disclosed in the financial statement, which has major impact or some sort of impact on the company's health. right? So all relevant information must be disclosed for transparency. So this is mostly related to the stakeholders, right? It could be shareholder, it could be government, it could be any debtors or creditors, right? So if any information related to, suppose, I mean, the stakeholders, if it is not disclosed, talking about the taxes, right? So if company is not paid in advance or something like that, and it is disclosed in the books of account, because anyhow they have to pay the taxes, right? So it is seems like, they are not transparent with the financial statements. So the full disclosure is important. Condition applied, right? What information they have to disclose. If it is not in material nature, probably it should not be included in the financial statement. So just to summarize it, okay, these principles, these conservatism approach or the convention is always keep in mind, especially if you are talking about the accounting concept and the conventions uh, based upon the uh, uh, accepted principles, right? And it is very much important to record anything, to understand anything, and the consistency should be maintained. So with this note, or with this summary, okay, now I'm going to conclude this, right? I mean, especially if you're talking about this topic is concerned, mostly it comes under, the beginning of the accounting, because so that, everyone should aware about what is principles and all. Okay, so that's all for today's session. I hope you all understand the topic. Keep practicing, and I'll see you in the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.